Hi everyone, and welcome to this morning's webinar, or at least as I always say, it's morning here in the UK because I know we do have visitors from other parts of the world where clearly it is not mornings, but wherever you are in the world, you are very, very welcome. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I've had a quick look down the list of attendees, and I can see we have some of our students, forex program students with us. I know we've got some of our quantum users, and I've got some people that maybe I think it's their first time. I don't recognize some of the names that, whichever category you fall into, it's lovely to have you with us today. Before moving on to the charts very quickly, what we're going to be looking at is obviously the forex market, and we're going to be looking at some charts, and we're going to be looking at the price action, but not just the price action, but the price action and the volume as activity, because the methodology that we look at in these webinars and what's taught in our program and is in the books, and just what David and I, my husband who's sitting behind me, we've been using for almost, it is almost 20 years now, or maybe even over 20 years, is what we call volume price analysis. And it's excuse me, apologies, I really didn't want to cough into the microphone. Price action and volume, and by volume the activity, because what that does, it tells us, it confirms to us whether that the price action that we're seeing is actually genuine or not. But what we've done in forex, and in fact the other markets as well, is not only do we look at the price action and the chart, we look at the fundamental news, we look at what the other markets are doing, what we call the related markets, because sometimes you can have a signal in a non-related in a market that is not directly related to forex, which can signal a change in sentiment. We had a really good example yesterday with the VIX, and David will explain that later. So you have to have this sort of what we call we call it a three-dimensional approach, but it's in a holistic view of the markets, because the markets move on sentiment, they move on emotion. And in fact, I have a very, very nice site that you may wish to consider talking about emotion. If I can find it here very, very quickly. Where are we? And I really, really do want to share this with you. Here we are. I think it's this one. Right. And it had a fantastic strap line on this one. And I really do think it sums up what trading is all about. And here it is. And here it is. I was so taken by it. Make emotion work for you, not against you. This is a site called Sentiment Trader. It's really one that I look at more for stocks, but it does have a free newsletter. They've developed, like, as I said, 700 sentiment indicators. I'm not suggesting that you have to sort of buy into every single one of these, but if you're thinking of moving into stocks from forex, or you have investments and what have you, it may be a site worth investigating. And it's called analysis over emotion. Make emotion work for you, not against you. Now, that emotion that the market is that we see in the market via the buying and selling of certain currencies, once you understand which currencies are what we call risk currencies, which currencies are safe haven currencies, you are going to be way ahead of the majority of your fellow traders. And if you align that with volume price analysis and hopefully our indicators as well, I can assure you, no one can guarantee 100% success, but you are going to be a lot more successful than sadly a lot of the other traders are in this market. Now, what we've also done, as I've mentioned, indicators, we've developed some specific ones for the forex market. Our users will be familiar with these, where we basically track the flows into first of all the individual currencies, and then the currency pairs, because as I said, this market is about sentiment, it's about money flow, and what we want to do is identify that money flow quickly. We want to see how that is reflected in perhaps the pairs that we are trading. I've been focused on the British pound for this month. The British pound sold off really heavily yesterday. There's been a further sell-off today because we've had some fundamental news to do with GDP. I've got the charts up for that. So there's been some quite lively price action already, and we're not even at the London Open, so that's quite unusual. Going to the fundamental news generally, this is what's been coming in, as you can see here. Not good at the moment, but that is not good for anybody at the moment, given that it's you know, the consequences of the virus, and it's Bastille Day today. Vive la révolution, as they say. I think we're having a revolution at the moment. Don't think the French Revolution ever went away, but there we are. So congratulations to the French. It's Bastille Day, celebration of the French Revolution. Right, what have we got coming up? Well, that hasn't. We've got something I don't like about Forex Factory. It doesn't update in real time. There we are. So we've got PPI thing. What we've got coming up between now and 10 is got the ZEW for Germany. It's not given a level 1 status, in the sense that it's not a red color, rather it's yellow, which I find a little bit odd actually, because I don't know why it's been demoted. It always was red, but it's not. But it is still a very, very important indicator that we have to consider. Now, when I said earlier, when we look at the markets, we look at the technical, we look at the fundamental, we look at related market, but there is another element we have to consider, and that is the political, and in particular when it comes to the euro. For those of you who are euro traders, this is the performance of the euro. This was yesterday. This is on our CSI, which I said tracks the flows into individual currencies, and then the currency matrix picks that data off and ranks the pairs. Now, I want to there's a couple of important lessons to do with the currencies that we see on this indicator, and I just want to focus on the euro for a second. It's an important week for the euro from a political perspective and also from an economic fundamental perspective, because we've got the ECB on Thursday. Now, usually with a currency, you can see strong buying and selling in a currency before a major fundamental piece of news, such as the central bank meeting. But yesterday, the euro absolutely, you know, it really kind of went ballistic, and we can see here, this is the hourly chart. I'll just expand it. It really was, and you can see the extent of the overextension on this for this currency. You have to bear in mind that currencies, markets, instruments, they can stay overextended a lot longer than you and I can stay solvent. And you only have to look at what's been happening with shares like Tesla. You can look at that on the NASDAQ. You know, traders and investors get very nervous when things go dramatically higher. I think I mentioned it last Thursday in our day trading room, where basically as traders and investors, actually, when something is going up and up and up, we're happy, oh great, it's going up, and as it keeps going higher and higher and higher, we get more and more nervous. It's a bit like a football team and a sports team that has a winning streak, and they win and they keep winning. And the more they win, you can tell the nerves start settling in, and it's the fear comes in, the fear of losing. How ironic that when things are going against us, and you know, we perhaps have a chart and it's going lower and lower and lower, the overriding emotion is one of hope. Well, we hope it's going to turn. Oh well, when it'll get to this level, we hope it's going to reverse. As I said, going back to that site sentiment trade, we have to make our emotions work for us and not against us. But to get back to the euro, usually under normal circumstances, when you have a big fundamental release coming up for a particular currency, you could have strong buying, you could have strong selling, but it tends to be closer to the event. The ECB is not till Thursday, so this has been going higher and higher. And the one thing you have to remember about the euro. Yes, it is impacted by fundamental news, of course, but it is essentially a political currency. It is a construct. It's an artificial currency in the sense that it is a collaboration between various countries that make up the EU. And it's not a complete currency. It has many things in common, but it doesn't have the one thing that all currencies have to have, and that is debt union, in the sense that there is a pooling of debt. So you have this tension within the EU where you have the northern bloc, Germany, Finland, what now have been called the Frugal Four, who are very conservative. They run surpluses, and then you have the reprobates at the bottom, the Italians, the Spanish, the Greek. And I can say reprobate because those of you who don't know me, I'm Italian. I can say anything I like about the Italians. Most of it is generally true. There is this inherent tension within the currency. Until there is complete, not just political union, but debt union in the currency, these tensions are always going to rise to the surface. Now, why it was bought so strongly, and we had a little bit of a sell-off and it looks like it's turning up again, is primarily because the Germans, for very, very many reasons within the EU, they are the driving force. The French and the Germans and the French, but essentially the Germans, they don't lay down the rules, but pretty much what Merkel says goes. And what has happened is there has been a bit of seismic shift in the EU, in that there's going to be this recovery fund. In other words, the northern states, the states with surpluses, there's going to be much more of not conciliatory, but there is going to be countries such as Italy are going to be allowed to spend more. Their economies are going to be supported, all because of the virus. So if you are a euro trader, yes, you have to pay attention to the technical chart. Yes, you have to pay attention to the fundamental news. Yes, you can have to look at related markets, but you have to be aware of the politics. The politics is what drives the euro primarily. If you remember Mario Draghi, his famous saying, "We will do anything." What was that phrase? I've even forgotten it now, Dave. We will do everything. We will do whatever it takes. That's what it is, and that was it. Because the euro is constantly being written off by various analysts and commentators, and somehow it manages to pull through. Maybe one day, circumstances will catch up with it, but until that day, you have to almost keep another news feed on your computer to do with the politics. The politics being, what are the Germans going to do? If you remember, a month or so ago, the German courts called into question the decision by the ECB that more QE would be coming along, breaking all the sort of rules to do with the euro, and there was a big hoo-ha about that. See, that's it. This is the death knell of the euro. Now suddenly Merkel has changed her stance. She's kind of much more conciliatory. No, countries that have suffered very badly, aka Italy, we've got to help them, and that has changed the whole attitude towards the euro. So ECB decision on interest rates are irrelevant at the moment, but it's what Christine Lagarde says. She is a political appointee. She's not a central banker. I don't think she's even got an economics. She's a lawyer. So that tells you immediately how you have to approach trading the euro, and it is just unique to this currency. But this is obviously the Italian Prime Minister Conte. There's an EU summit as well. About the Italians, you probably also read every 5 minutes that various political parties in Italy have now decided that they're going to break away from the euro. They're not going to have anything to do with the EU. The euro has been a disaster for Italy, an absolute disaster, because the way the Italians used to deal with issues before the euro, economic issues, they just used to devalue it, which was great. Whenever we went back to Italy, you could be a millionaire, because I think a million lira used to equate to about £400, and it was amazing. You'd have millions and millions of lira. When they joined the euro, so what they did was they could devalue their currency, make things cheaper. You go to Italy, great, shoes were cheaper, food was cheaper, it was wonderful. They have lost that ability to devalue themselves out of any economic crisis. So things in Italy have not been good for the last 20 odd years since the euro was introduced. But one thing you have to remember about the Italians: every time there is a bit of a flare up in the media from the 5 Star or whatever political party is anti-EU, we're going to have Italexit, we don't want to be part of the euro anymore, etc., etc. The Italians then all seem to come around, and it's a historical and a cultural thing with us Italians. Italy is only is a relatively new country. Prior to Garibaldi, we were made up of individual states, which is why when you go to Italy, the regions are very, very different. The food is different. Our language is different. My version of Italian is nothing like the version of Italian that they speak in Venice. I don't understand a Venetian. The Venetian doesn't understand how I speak, if I speak the way my parents used to speak. But we have a common, it was decided that the Italian language, in inverted commas, was actually the Tuscan dialect. Now, there's a reason for this little bit of history, because it actually explains why the Italians behave the way they do, and the Italian political establishment. So because we were very regionalized, where I come from, our lords and masters may have been the Papal States, it could have been the Spanish, it could have been Lord knows who. So what happens is Italians are very loyal to their family, but also to what's called their bell tower. So if you ask an Italian, where do you come from? They very rarely say, if you ask someone, are you Italian? They'll say, yes, I'm Italian. Say, where do you come from? They will tell you precisely where they come from, whether it's a small village from, the province in the region of Lazio, or I come from a place called Frosinone, and I will tell you exactly, I was born in this village. What that tells you about the psyche is that the Italians were not knowing who was their lords and masters in any given time, because we had the Spanish, we had the French, we had the Papal States, we had Lord knows who invading different parts of Italy. We are always very conscious of, well, which way the wind is blowing, and we will go with the wind. So I'm sorry, I've gone a little bit over that to do with Italy, but Italy is actually key here, and it's going to be key for the next sort of year, for the coming months and the coming years. If Italy does decide it's had enough, then that is going to be huge consequences for the EU and the euro. But at the moment, everything is hunky-dory. Everyone is collaborating. The Germans are on board. There's a nice, warm, cozy feeling. We're all in it together. We're all going to look after each other until probably the bills come in, which is why the euro had this huge buy of the euro yesterday. Now, Thursday, interest rate is going to be irrelevant. What's going to be crucial is what Lagarde says. She is a politician, and a lawyer. So let's see what happens then. And we'll just take it from there. Now, from a technical perspective, you think, right, we're actually going to trade this currency. What are we looking at? Well, we had a little bit of a sell-off yesterday. Is it going higher? Possibly. We have to look at the faster time frame charts, but the best pair has been, let's have a look, and this is what I've done. I'll explain what I've done with the indicators later. If we look at the euro pound, it was a fantastic trade yesterday. We can see I actually had a cross here on the 10 minutes. And by the way, if you hear like a klaxon going off in the background, don't worry, it's actually my alert system that I've set up on the 10-minute chart for my currency pairs. The currency pairs I'm focused on at the moment is really to do with the pound, but I've got a few down here. I've got the Aussie yen in particular. We can see it, had nice divergence on the Aussie yen. I've got the Euro Aussie kind of going in the same direction. This has been a nice trade. It's kind of flattening off a bit with London. Really nice divergence on Aussie yen. Why is the Aussie going up? Well, markets are kind of a bit brighter than they were last night. But the Euro Aussie here, as I said, we had this cross here, huge continuing sell on the British pound. And then what I've done is I've actually transposed these over here, and we can see here, this is the move higher. It was actually off the volume point of control. The volatility came in on the GDP numbers. If we go down to the 1 minute chart here, we can see here, this was the move higher. It's a bit choppy at the moment, lots of more volatility because of London, which we would expect. Go back to the 10 minutes. Consolidation, which we would expect. Volatility, back into the spread of the volatility candle, but then it actually came out. Now we're back in another volatility candle triggered by London, but it is still, the pound is still falling. The euro, not so sure. We'll have to wait and see. And this is what we're seeing in terms of the price action for the euro pound based on, as I said here, this is it. It fell off, it turned over, but it looks like it's going higher. This can be oversold. There will be a turn, but at the moment it seems like heavy selling in the pound. And if you've got any questions on anything I've said, please just drop them into the chat box and happily answer them, either myself or David. I'm going to keep looking at my charts. I know David's got his charts. We're going to move over. I've got NinjaTrader. This is MT5, MT4. You'll probably notice I've got hundreds of charts on MT4 and 5. And if you're concerned about, oh my goodness, how can you run that many charts on one machine? We do actually have a suggestion and a solution. Our users, our quantum users are aware of it, as are our forex program students. And I'll get David to explain what we mean by the bucket solution.